Good evening, everybody. I'm Pierre Robert, the Daily Trader. It is February 22nd, and we are going to take a look at Tesla stock from a technical analysis perspective. My goal in doing these videos is to help you understand how you can use technical analysis to make better trading and investing decisions. But I'm not a financial advisor, so please do your own research and make your own decisions. So Tesla today is up $3.49. That's 1.77%. Closed at 286 cents. Post market, we seem to be down by 72 cents. So let's look at what we have here on the chart. If we don't look at the chart, we don't understand the overall context of the move in Tesla. So yesterday, remember, we broke 198.12, and we still are, into these lower highs move. But today we bounced a little bit above 198.12. We came down quite low today, so the low of the day was 191. 191, this is pretty close to our support at 187, but it's quite there yet. It's not quite there yet. Let's look at the 1 hour chart. So on the 1 hour chart, we can clearly see this. Downward channel that is part of the big congestion zone that we have been in since February 2nd. This is pretty clear. This is where we are right now. The first hour of the day was right here, opened a little bit higher than where we closed, tried to go high. Went as high as 200, but then we were squished down. And then we have been recovering ever since. So we have a very tiny support right here at approximately 191. And maybe this is going to coincide with something we had here. Is it? No, it's not. It's not perfectly there. It's very close. It's very close. So let's just keep it as a double support. It's quite close, and now we have been bouncing today. So it's a pretty good day considering we came down, but then it took 2 hours to come back pretty much even to where we were. Then broke 198.12, sideways, and now we are really testing this downward resistance, which we drew based on this high here and this high here. And we don't have stochastic over 60 yet. It's at 50. So to get the clean breaks here, we need stochastic over 60. If not, our level of confidence in that break is going to be quite low. So it's possible also that we come back down again. Let's come back to the daily chart. So let's look at our indicators. So stochastic still at 78. So stochastic is still quite good. We have our MACD breakover bearish. In terms of RSI, we are still above 50, and the DMI is still very good. Not much has changed. We are still in this congestion zone. The fact that we have this long wick here at the bottom shows us that we are really having a rebound effect. So, we have buyers that are coming in. When Tesla is coming down close to 187, they come in and they push the stock back up. That's the real definition of a congestion zone. So we have a point here where a bunch of people are selling, and here when we come at the point where a bunch of people are buying. This is completely typical for what a congestion zone is. So basically, if you are not in Tesla right now, wait, because we could be coming down or we could be going up. Just wait until either 214.30 is being broken or 187.41 is being broken. This is the first criteria. If we break 187, it would be really nice to get stochastic under 60 so that the move has more chance to continue. And the same thing with a break of 214, we need to have stochastic over 60, which we already have. Nobody knows what is going to happen, but these two things can happen. So if you are not yet in Tesla, you can chance it right now. You can chance it and say, well, okay, at 198 or so, Tesla is at a good price and you can buy. And then if it comes back down, then you should get out at 187, because there's no point in staying in a stock when the stock is in a downtrend. There is no point in doing that, because you would just be losing money. On paper, yes, but still, why not wait for the downtrend to be over? Let's take a look at the VIX a little bit. So VIX is maintaining itself quite high. Yes, it's lower today, so it's down 0.6, 2.62%, closed at 22.28, but it's still quite high. It's still quite high. We still have a big stochastic at 79, and pretty much all of our indicators are turning green. We only need to have the red line of MACD go above zero in order to have all of our indicators in the bullish mode. So that would not be too good for the stock market. So, we need to be really careful about this. This is the second day. This is the second day that we are above 2071. It took us a while in order to break that, but now that it's broken, after 2 days, this seems to be able to stay that high. We'll see. Let's look at Dow Jones. So Dow Jones is down a little bit, so down 0.26%. So very close to our support at 32,874. I kind of like this candle. Yes, it is red, but this is just a short body candle with the same length of wick at the bottom and at the top. So this is indicating a little bit of indecision. So this is what usually happens when we come close to a support or close to a resistance. It's not the full-blown candle as we have when we have a big move within a congestion zone. Look at this one here. Big green candle, big red, green here, and this one is just a little bit undecided. So I kind of like to see that. Let's look at the S&P 500. The same thing with S&P 500, the same type of candle, still above our support. The support is still maintaining. We are getting quite close to it, very close to it. We lost stochastic over 60 a couple of days ago, and now stochastic is at 17. So there is a possibility that we break this bullish trend support. It's not broken until it's broken, but it's close. So let's just pay attention to that also. And let's look at NASDAQ. NASDAQ has already broken its downward channel. It has already broken its horizontal resistance here at 11,565. So NASDAQ is already gone. Let me just draw this a little bit better right here. So this is the current very tight channel that we have right now. This is a goner. There's a small piece of news that just came out after the close, and that might impact what is going to happen tomorrow. The Fed that had their FOMC meeting on February 1st just released today their meeting minutes. So last time we heard about their decision, but now we are looking at the minutes. And now, pouring through the minutes, it seems like a bunch of voting members wanted to push for a 50 basis point move. So basically, people are speculating that the next move for the Fed is going to be a 0.5% increase instead of the 0.25 that we got last time. Just looking at the minutes, they saw that a significant number of people wanted to have a bigger hike. And now people are afraid that these same people are going to have a greater influence next time. So this is really interesting. It goes to show that the stock market is really based on fear, is really present. This is just conjecture. This is speculation. This is not based on truth. This is news, but it's not a fact. There's the fact that some people wanted a 0.5% increase and they may want it again, but that's it. Is it going to happen? Other pieces of data are going to be involved next time before the Fed makes their decision, but it just goes to show how the stock market reacts to any fear and other emotions. So thank you very much for watching. Thank you for liking, commenting, subscribing. If you like what I do, you can become a YouTube member. Click on the TradingView affiliate link. I'm going to wish you a great evening. We are going to talk tomorrow, and I'm going to tell you à la prochaine.